Hello and welcome to another episode of the Smaulgld Speculation Series. Today we're going to be asking questions about what impact derivatives trading might have on Bitcoin. Bitcoin derivative trading has now arrived. LedgerX, the first federally regulated cryptocurrency clearinghouse and exchange, is now open for business. During LedgerX's first week, their soft launch, they traded over $1 million worth of cryptocurrency swaps and options. And over the past week, from October 18th to the 21st, Bitcoin we saw rose from $5,150 at the low to $6,150 per coin. Now, during this time, most altcoins like Litecoin and others fell. Now, is this a correlation or just a coincidence? Let's check out what's going on with LedgerX. So when we talk about derivatives, that word strikes fear and loathing in the hearts of gold and silver owners, and it conjures up fears of flash crashes, naked short selling, smash down of precious metals in the middle of the night for no apparent reason. In these episodes, the constant appearance of manipulation has led to sentiments of despair that gold and silver prices may never fully reach their true price levels. And many gold and silver proponents have taken the cryptocurrency plunge and have begun to allocate more of their funds to cryptocurrencies like Bitcoin and Litecoin, with the rationale that crypto markets are more closely tied to the law of actual supply and demand, and they're not subject to manipulation via derivatives. Well, at least until now, or this week. So derivative Bitcoin trading arrived last week via a company called LedgerX. LedgerX raised $11.4 million in the Series B equity round earlier this year in the spring, with the concept that it would establish a regulated Bitcoin options clearinghouse and exchange. In July, as reported in Zero Hedge, the company became the first company to be granted approval by the U.S. Commodities Futures Commission, the CFTC, that would enable them to clear and settle cryptocurrency derivative contracts. Yesterday, LedgerX announced it hadn't lost much time that its Bitcoin derivative trading had begun. So they got their license in July, and here we are, third week in October, and they are live. And here's what they had to say about their release. Institutions who have gone through our rigorous onboarding process over the past few months have had the opportunity to trade this week. What we called internally a, quote, soft launch, unquote. We were hoping for a quiet first week with minimal volumes to test pipelines. Wow, were we mistaken. We ended up completing swaps and option trades worth over $1 million. So LedgerX platform is up and running. Reminder, it is federally regulated, and as such, in order to participate on the platform, if you want to be on that platform, participants must meet certain requirements, which I've linked to here. And basically, to be on that platform to trade derivatives, you have to be U.S. based and U.S. banked, and you must be a currently regulated financial institution or investment company. And then they also have some other entities or individuals who can participate as long as they have significant assets. So here are the questions we have, and I'd like to get your thoughts below on cryptocurrency derivative trading. First question, probably on everyone's mind, is, which you're probably thinking about when you're reading this or listening, will derivative trading boost or suppress cryptocurrency prices? Now, we know that prior to the launch of the gold futures exchange in 1974, there was a missive from overseas back to the United States, and this is from Ron Spear, Charge d'Affaires and Deputy Chief of Mission, and he was talking about the upcoming launch of the gold futures market, which was scheduled to coincide with the ability of Americans to begin to be allowed to own physical gold for the first time since 1933. Physical gold was at the end of 1974. They decided that Americans could then start again holding physical gold, and that's about the time when they also launched the futures market in gold. Here's what he had to say. The belief that the futures market would be of significant proportion and physical trading would be minuscule by comparison. So you can get the bulk of the trading on the futures papers market, and that physical trading would be minuscule. Also expressed was the expectation that large volumes, futures volumes, would create a highly volatile market. In turn, the volatile price movements would diminish the initial demand for physical holdings. This would scare people away from holding physical metal and most likely negate long-term holding by U.S. citizens. So, we've seen that trading of futures where physical settlement is now the exception rather than the rule. That allows notional amounts of gold and silver to trade far in excess of what's available to back those trades. As such, traders look to lock in fiat profits from their activities rather than to acquire ounces or kilos of gold and silver. So the notional value of gold and silver futures trading far exceeds the sale or trade of gold and silver bullion. So you can see money goes into the futures contracts where there's no actual gold, or for the most part, trading hands. And then the amount that is actually purchased in bullion form is far less. So what will that, will we see a similar dynamic in the Bitcoin market? So for commodities like silver and especially gold, where the value of it is perceived in fiat price, traders are easily satisfied with taking their trading proceeds in fiat currencies. So again, will Bitcoin futures trade like gold futures? Bitcoin has emerged as a more of a financial asset than a day-to-day currency. That's why it's so valuable. People aren't selling it as they use it. They are holding it, hoarding it, putting it into deep cold storage, putting it on hardware wallets, and then some are trading it day to day. But the use case has diminished with the higher transaction fees and just the price rising. No one wants to get rid of it. And also the time for some of the transactions to settle. It's not very fast. So it's not efficient to use Bitcoin as a currency, but it has been a very good either speculative asset or some might say store of value. Now, will Bitcoin derivative trading take off? Given that there are people who now view Bitcoin as a financial asset, speculative asset, will we get a significant derivatives market developing whereby traders will prefer exposure to the Bitcoin price rather than outright ownership of the Bitcoin? Now, one of the reasons you'd want to own Bitcoin is to get the value of it. Well, if you get the value of it via a contract in fiat, you may be satisfied with that. And given that most people aren't planning on spending their Bitcoin, you could see how maybe that might be attractive to traders. Also, in the gold area, delivery, storage, and insurance costs often dissuade many gold buyers from taking possession of their metals. Now, you don't really have the same issue with storage fees, delivery costs with Bitcoin, but still, people may prefer to trade through fiat on a regulated exchange and take their profits via fiat. So the question is, will the same rationale apply to Bitcoin derivatives trading as it has to gold? Next question. Will Bitcoin be manipulated in the same fashion as gold and silver? This is assuming that a trading market develops in the same way that gold and silver is suspected of being manipulated. Now, the suspicion on gold and silver manipulation is that they manipulate the price down. First question is, will they manipulate the price of Bitcoin and other cryptocurrencies down? Will they manipulate them at all? Or do they have an incentive to manipulate them higher? The last question is, will derivative trading in cryptocurrencies bring them into the fiat fold? Second to last question. Now, people who like Bitcoin and cryptocurrencies often suggest that because they're decentralized and they have fixed limits on the number of coins that can be issued, they are fiat and central bank killers. Now, we wrote an article, Cryptocurrency, are they fiat killers or strengtheners? And we take both arguments, but we also take the point that it's possible that cryptocurrencies might actually strengthen the grip that central banks have on fiat currencies if they're able to fold them into the payment system, like companies that issue tokens like 10x, where you can load all of your different cryptocurrencies onto a Visa payment card and use it for payments. Well, now the cryptos become part of the system, and they can be tracked and taxed and so on. Also, if you have regulation of exchanges like Coinbase and Kraken and the like, well, then you can also do the same thing. You can track the transactions, you can tax them, and customers get used to using them no differently than their brokerage accounts. Now, the advent of decentralized exchanges and atomic swaps, however, may make such taxation and regulatory oversight more difficult. And we covered that also in a story that also appeared on Zero Hedge. Now, we've also noted that investment brokerage giant Fidelity Investment, who has about 75 million customers, they're conducting Bitcoin mining at the moment. They've tested using Bitcoin in their employee cafeteria. And recently, they've integrated the Coinbase interface on their customers' trading homepage. So if you go to Fidelity and have an account there, you can click a button and add Coinbase onto your homepage so you can keep your entire portfolio, your stocks, bonds, and cryptocurrencies in one place. So that tells me that Fidelity is very interested in crypto trading. They realize that now, at the time when I wrote that, Coinbase had less than 10 million customers. It looks like they now have 11.2 million customers. So clearly Fidelity sees the potential for the fiat profits in cryptocurrencies. And I wouldn't be surprised if they either bought Coinbase outright or started their own cryptocurrency trading operation. Clearly, they're developing the expertise institutionally. And the last question I have is, will the CME Group enter the digital currency derivatives game? Well, now that you've got a regulated derivative trading unit, now a reality in the United States with Ledger X, and the value of that trading is probably going to exceed, if indeed the trading takes off, the value of the Bitcoin itself, the value of all the Bitcoins out there. This can be a point not lost on the CME Group. Remember, CME Group is the operative of the famous derivative futures market trading exchange, COMEX, where there's gold and silver futures derivatives traded on that exchange. So, according to CoinDesk, who happens to be the CME Group is an investor in the Digital Currency Group, which owns CoinDesk. Well, according to CoinDesk, the CME Group is indeed looking to develop a digital currency derivatives trading system. So, this all sounds like we're heading down the road towards regulation of Bitcoin, cryptocurrencies. However, we're not there yet, because the CFTC, when it granted its license to Ledger X, noted this authorization does not constitute or imply a commission endorsement of the use of digital currency generally or Bitcoin specifically. Now, whereas Jamie Dimon of JP Morgan, CEO, called Bitcoin a fraud last month, at least the CFTC has not labeled digital currencies frauds or Bitcoin specifically a fraud, which does give hope to those that would like to see Bitcoin and cryptocurrencies gain mainstream acceptance and full legal status. Let me know what you think. Thank you very much for listening. If you'd like to help the site out, you can donate to Smaulgld via PayPal, Bitcoin, Litecoin. You can become a Smaulgld patron. All the links are below this video that you're watching, whether it's on BitChute, VidMe, or YouTube, or you're on the Smaulgld.com site. Also, you can buy your cryptocurrencies through Coinbase. You can sign up through Smaulgld. Again, non-investment advice to buy cryptocurrencies, but you can buy Bitcoin, Litecoin, and Ethereum through Coinbase. And if you do sign up through the link, you buy $100 worth of Bitcoin, you will get $10 extra worth of Bitcoin credited to your account, and Smaulgld will also get $10 worth of Bitcoin credited to his account. And you can also buy precious metals through the Smaulgld site, not investment advice that you do so, but we have affiliate arrangements with BGSC, Golden Eagle Coin, SD Bullion, and Money Metals Exchange, and you can compare pricing and shipping at the links of those precious metals products. And again, if you buy, Smaulgld makes a small commission. Thank you very much for listening.